I know the bigger banks are actually making it a priority to kind of reach out to some non-target schools,
Yeah.
and diversifying the candidate pool that way. So I think that's beneficial into everyone's. If you're from the non-target school, that certainly benefits you.
Basically, George is currently a vice president, although soon to be director, hopefully, by the end of this week. Fingers crossed. But George is a good friend who's a vice president who currently works at one of the top bulge bracket banks out there. Okay. And I had to ask George to do me a favor and hop on here today and talk to me and talk to you guys. And so, I'm going to be interviewing George and asking him some questions about his career and just recruiting advice and things that I think would be helpful for you guys. But look, guys, as we're going through this interview and as you're listening to the conversation, if you guys have any questions, if you have any questions for George, drop it down in the comments. And I'm monitoring the comment section. There will be a little bit of a lag, but when I see your questions, I'll try to ask George for you so that he can give you his honest opinion about, whatever advice that he might have for you. Okay. So this is a rare opportunity for you to just, really get genuine advice from an investment banker, because look, honestly, usually when you talk to bankers, like if you're networking with bankers and you ask them a question, most bankers probably have to be, there's certain things that they're just not going to tell you. Right. And so, like, you may or may not always be getting the raw, unfiltered truth, I guess. And so we're going to try to do that for you today. But George, are you there? You can hear me okay? And hopefully everything's working technology wise.
Yep, I can hear you, Sam.
Awesome, man. Well, look, thank you for taking the time. It looks like people can hear us. So we're good. We're live in the Facebook group. If you don't mind, why don't we start by just if you can give a quick introduction about who you are and just your background and things like that, so people have context, and then that'll probably also help them frame their questions later on.
Yeah, sounds great. Thanks for the intro, Sam. Appreciate it. And obviously, virtually, nice to have everyone listening in, and please send questions as you have them. We'll try to answer to the best that I can, at least. But by way of background, so I graduated from Cal on the West Coast and was making a decision, I think, much like many of you, about where I wanted my career to go. Finance was always interesting, and at least I thought no better way to get, a real great understanding of finance, financial concepts, to do it quickly, to do it in a dynamic environment surrounded by talented people, than to try investment banking. Candidly, I didn't have a summer internship. I'm sure some of you guys are thinking about summer internships. I did not have one, but was still able to break into the field, if you will, as a full-time analyst. And this was coming out of 08, 09, the Great Recession. So it was a volatile time. It was a volatile time for banks. Wow. An unpredictable time as well. So it wasn't the easiest path, but I think with the type of help that you're getting from Sam, the type of studying you're doing, that is going to be incredibly instrumental in terms of securing those jobs with the banks that you want.
Yep.
Go ahead. Did you have a question?
No, sorry. I didn't mean to cut you off. I'll let you.
Yeah, no problem. I guess this will probably be helpful to folks, but as I was making my decision, I really focused on banks that fell into, at that point, at least, the bulge bracket category. And I can't say there was a lot of science around it. I just thought that would give me the best and the broadest experience. I was solving for kind of being a generalist as opposed to a specific group. I didn't know if there was a specific group that was more interesting than the next. So generalist is what I was solving for. And I was solving for people that, I kind of clicked with and that I could see myself working well with and learning from. And so I had, again, I didn't have the internship, but when I was recruiting for full-time, via the Career Center and via kind of some elbow grease and some hustle. Got some interviews, and was able to fortunately land at a Bulge bank that checked a lot of those boxes that I mentioned earlier. Um, from there, my path is a little bit unusual. I'm sure folks might have questions about this, but I was an analyst for 2 years, and then followed a very traditional path where, a bunch of headhunters, a bunch of recruiters reach out to you and talk to you about the next step. That next step being a mix of private equity, hedge funds, venture capital, et cetera. I took probably the most common of those paths, which is the private equity path. And so after my 2 years as an analyst at a bank, I spent 2 years at a private equity firm. But what I realized after that is I kind of missed, and this is where some of you may say this is an unusual path, but I missed the work that I was doing on the banking side. Frankly, I missed the people that I had been working with who had become mentors and teachers for me. I missed how dynamic it can be, where you do a deal, you learn about a new company, a new business, perhaps a new industry, and then you move and you do a different deal, and it could be something completely different from an industry and a product perspective. So I missed that, and actually had the opportunity to go back to a bank, and to be an associate at that point, and have been doing that since, and have now been, in finance kind of over 10 years. As Sam mentioned, vice president, and hopefully moving on to the director level, fingers crossed there. But that's kind of been the progression. I'm happy to talk about the different steps
Yeah.
along the way from associate to VP as well.
Yeah, that's awesome. Thanks for that really great introduction. So I have so many questions already based on what you just said. So I guess the first question that I will ask, and again, guys, if you guys have your own questions, feel free to drop them in the comments and I'll try to get to them as well. But here are my questions. First things first, you mentioned that you didn't have a junior summer internship in college, or maybe you did, but just not in banking. But you were still able to break in for full-time, even during like the 08, 09 timeframe, which is, like the peak of the financial crisis. And so I'm sure like the job market back then was pretty tough. How were you able to do that? Or like, what were you doing junior summer? And then like, how were you able to pull that off? Because at least nowadays, and I think this was the case back then too, obviously, and you're a VP, so you probably know this, like most of the full-time offers typically go to summer interns that are coming back, right? Like they do a good job during the summer internship and they get a full-time offer to return. And so usually there's not a lot of spots left for full-time recruiting, and some groups don't have any spots left. Is that right?
Yeah, look, it's a very good point. Nowadays, that very much feels like the framework where summer analysts come in, interns come in, they do their summer, and assuming they do a good job, there's a spot allocated for them from a full-time perspective. But again, look, that's not always the way it goes. Sometimes people do a summer and decide that group or that culture wasn't a fit for them. They go elsewhere, and a spot opens up for a full-time candidate, where the bank will kind of have to scramble and go through this, interviewing at schools, interviewing elsewhere to fill that spot. That happens frequently. Sometimes you have the situation where, you have X number of summer analysts, but then full-time spots, you learn at the end of the summer, you've got more spots than you initially thought. Obviously, that's a great position to be in. Doesn't always happen, but you get situations like that as well. In my particular case, I had a summer internship, but it was more valuation focused, and so not at a bank, but more kind of valuation advisory. And look, I was able to translate that and explain that as I got the technical, quantitative and qualitative experience at a summer, proved that I could work hard and got a return offer, but realized that for me, I wanted a little bit more of the fast-paced, dynamic environment,
Mm.
and an environment where you're close to the client, where you're providing advice to a client, and you're the trusted advisor to that client.
Yeah.
And that's kind of how I transferred that internship, which wasn't a banking internship, into ultimately a banking seat as an analyst.
Got it. Okay. So basically, if I break that down for just the students that are listening right now, what you did was you play to your strengths and you emphasize like, hey, I still got all the technical knowledge and the skill set that's needed to do the job. And you got the return offer. So it wasn't like basically you're very capable, but you're looking and you had a good experience, but what you're looking for is something even better or more client facing, and where you're actually like on the front lines working with these companies as opposed to maybe just doing the valuation work behind the scenes, essentially.
That's exactly right. That's exactly right. And then, for finding those interviews, me personally, and I know some of this has changed over the years, but me personally, I worked through our, career center, career services site, and also networking, which, a lot of you guys are doing alongside Sam's help, but doing the networking to figure out where there are opportunities and spots, and being very proactive about reaching out to people at those institutions.
Got it. Got it. Okay. Awesome. And so, look, guys, for those of you, obviously, look, if you can get an investment banking internship for your junior summer, you should absolutely try to do that, because that's always going to be the easiest way in, right? Like George just talked about, like you get the summer internship and you get a return offer for full time. But even if you can't get a banking internship for junior summer, then just try to get the next closest or most relevant experience you can. Like in this case, George did a valuation internship, which is still highly relevant because you're working on valuation all the time when you're in banking, right? And then you just have to be able to spin that experience in a way that makes the banker view you as someone who's capable for the job, right? In your experience, George, like now that you've been in banking for so long, like for every I mean, I don't know how big your analyst classes are each year, but like say for every 10 full-time analysts that you guys hire, roughly how many of those analysts came from your summer intern class, would you say?
Yeah, I'd say 10 is probably stretches across 2 to 3 years. Depends on the group, obviously, but probably 75 to sometimes higher. There are years where it's 100%. There are years where it's maybe 70%.
Okay.
I'd say over the last couple of years, I've usually seen at least one spot where, again, someone decided to go elsewhere for after their summer, or it just didn't work out, and so a spot opens up, and we go and find a candidate that hasn't interned with us before.
Got it. Okay. But sounds like it's the vast majority.
Vast majority.
Yeah, 3/4, sometimes even the entire class will be taken by summer interns. So again, guys, not to belabor the point, but if you can try to get the summer internship, that's going to give you the highest probability of getting in, right?
Yeah.
The other thing that I want to talk about too is like there's this trend that we've been noticing where the summer internship recruiting process has been moving up earlier and earlier every single year. Well, I mean, maybe I don't know what's going to happen this year because of COVID and all that. Maybe I don't know if you're able to share, but like RBC, for example, already opened up their summer 2022 applications back in September, right? Like I don't know why they went so early, but like, is that a trend that you see continuing going forward? Maybe this year's an anomaly. I don't know, but like, because at some point it's got to stop, right? Like at some point you guys are going to be recruiting high school students.
Yeah. Yeah, it's honestly mind-boggling. Just from my experience, I really didn't know that much about finance and banking until pretty far along in college. And now sometimes I feel like I'm talking for some of these positions to a freshman in college about about their dream job and why they're interested in banking. It's really interesting. But I totally agree with you, Sam. It's gotten earlier and earlier. Frankly, there's no more like we're going to start on this date and hire. It's kind of even on a rolling basis. Like season's open. If we see a good candidate, maybe we just bring them in and take them through the process. if they're truly worthy, and see if we can pick them off.
Mm.
But I see it, continuing to get earlier and earlier. So never hesitate to start and to start networking and to start chasing those opportunities, because that's exactly the trend.
Wow. Okay. Do you have any sense for, because I'm sure a lot of people that are watching, they're probably gunning for a summer 2022 junior internship. Like, any sense for when things might kick off this year?
Yeah. If RBC's already out there, then um, then I'd say, and I'm trying to remember what we've done, but I'd say Moose. Yeah, I'd say it's on. I'd say it's on. I think you're gonna probably see postings and job opportunities now
Yeah.
for people trying to fill. Again, we're talking about a year and a half from now. The world could be in a different place, but
Right.
definitely 18 months out, I think people are focused on it.
Yeah, I mean, so far, I think RBC is the only one that I have seen for the last few months. And then actually yesterday, because I'm always on the lookout for these type of things. Yesterday, I noticed a job posting for Deloitte Corporate Finance for summer 2022 also. And so that was the second one that I've seen. So my guess personally, and this is just a guess because I don't work at these banks anymore, obviously, but my guess is that a lot of these banks are going to gradually start to come out, probably, in the next month or two, but definitely the spring semester. And typically, what we find is that a lot of the elite boutiques will try to jump the gun first, and then like some of the bulge bracket banks will go earlier. Some go later, like J.P. Morgan and Goldman Sachs. They typically wait until the summer. At least the last 2 years or so, that's what they've done. I think J.P. Morgan goes in June and Goldman Sachs goes in July. But regardless, it's like you said, it's an ongoing process. Recruiting kind of starts, in our experience, second half of sophomore year, all the way through maybe the first half of junior year. And that's kind of the window if you
Yep.
want to get into at least like a bulge bracket elite boutique, or let's say middle market bank, right? Like one of the more reputable banks, right? Of course, if you want to work out like just like a small regional boutique or something, then you could take longer. You can recruit all the way up until your junior summer. But most people that we come across, they're trying to get into, say, one of the top 20, top 30 banks. And so that's kind of the timeline that we've seen. You mentioned too, by the way, it's not too early to start networking. One question that we get from students a lot is like, when should they start networking? Like, is there such a thing as starting too early? Like, should you start freshman year? Should you start sophomore year? Like, junior year presumably is too late based on the recruiting timeline that we just talked about. But like, when do you think is the right time to start?
Yeah, it's a good question. Look, I think, and it's hard because I'm a firm believer in enjoying the college experience, but obviously things have changed a little bit, and you do have to focus on your career earlier.
No, you're not allowed to enjoy college. No,
That's right. That's right. I'd say maybe, spend a good amount of time freshman year just figuring out what you want to do and learning a little bit more. If banking is what you want to do, learning a little bit more about banking, what the different kind of banks offer, what type of industry groups, presence, geographic presence. Maybe think a little bit about geography, where you want to be. Do you want to be in New York at the headquarters? Do you want to be in a regional office, Chicago, LA, San Francisco, Texas, for example, internationally? Do that kind of thinking. And I'd go through the school networks. So upperclassmen maybe that already have jobs or alumni that are connected to the school, and don't be hesitant to reach out, send an email, and say, look, I'd love just honestly 10 minutes of your time to learn a little bit more about what you do, about your group, about your presence, your footprint. And look, the hard thing about those types of, especially going out to older alumni, is sometimes people won't respond, but sometimes they do. And you send 10 emails, you get one response, and you're off to the races. And that's a good conversation you can have. Don't be shy about sending those emails.
Yeah.
That would be my recommendation. Yeah, if spend a little bit of time thinking about what you want to do, where you want to end up, and then do the outreach and try to do some of the networking.
what about for students? Because a lot of the students that are probably listening to this, they don't go to a target school, and maybe they don't have a lot of alumni that are already working in banking. Like, what advice would you have for students like that in terms of, maybe who they should be reaching out to, or how they can be reaching out, or maybe like having been on the other side of this
Mhm.
networking process now, like I'm sure students reach out to you all the time, right?
Yep.
Um, what makes you say, like, and I'm sure you don't respond to every single one of them because you're probably super busy. So like, what would make you more likely to say, okay, I'm going to talk to this person and then I'm not going to talk to that person? Like, what are some things that they should be aware of or keep in mind to
Yeah.
increase their conversion rate, so to speak?
Yeah, good question. Look, and I do my best. You make a good point. I do my best to kind of talk to folks that are reaching out, but sometimes obviously things get too busy. Inbox gets, crowded. You don't have time to respond, unfortunately.
Or you're working
But
on $1 billion deals and you just don't have time. Like,
maybe, yeah, yeah. But look, I think regardless of the school you go to, there's got to be, a finance club, a banking club, maybe a consulting club even that you should probably join, and we'll have people with similar interests, and you can talk to about networking. That club may have a senior advisor or a professor. I've seen this a lot of times that has some connections and knows some either alumni or just has connections that he or she can put you in touch with. Um, I know the bigger banks are actually making it a priority to kind of reach out to some non-target schools,
yeah.
and diversifying the candidate pool that way. So I think that's beneficial into everyone's. If you're from the non-target school, that certainly benefits you.
You're talking about
Um,
like all the higher views and pipe metrics and all this new stuff that the banks are implementing, basically.
yeah, exactly. And then again, look, you know, um, I've had folks reach out to me from all sorts of schools, and we've had some incredible hires from all sorts of non-target schools. And so, again, don't be shy about if you find someone, whether it's LinkedIn or some other way, and you find someone that you think you can form a connection with, or you have something in common, or a friend in common. Again, don't be shy about sending that message. Worst case scenario is you get a no, and you kind of gotta hustle that way. On the other end, on the other side of the job, on the banking side, that's very much part of the job is, you're trying to oftentimes pitch business and maybe you get to know that way. So it's a skill set. Learning that skill set early is important. And again, you may get 9 no's and 9 non-responses, but the 10th one, someone offers you a very good conversation and a very good introduction.
Got it. Okay, that makes sense. Um, so I guess networking obviously super important nowadays. I mean, just given the number of applications that you guys receive, if you, if you don't network, like basically no one knows who you are, and you're just kind of another piece of paper, right? Um, but so definitely do that regardless of whether you're from target school or non-target school. The other thing that I heard is like, look, you guys are actually making an effort to hire more non-target students, meaning because look, like if I go on forums like Wall Street Oasis or Reddit or wherever it is that people get their information from nowadays, um, a lot of people would have you believe that, oh, if you don't go to Harvard or Stanford or Wharton or one of these schools and have a 4.0 GPA and have done 3 investment banking internships and this and that, then you could pretty much forget about it, right? Or that's the impression that, or that's the myth that's going around out there. A lot of I don't know. What I personally, in my experience, found to be bad information. Like, would you
Yeah.
agree with that? Like, I mean, because I think that even if you're a non-target school student, um, you can absolutely still get into investment banking. I mean, I'm not gonna lie, it's gonna be harder, but you can get in if you play your cards right.
Totally agree. Totally agree. Totally agree. It is going to be harder, but you can certainly break through. And again, some of our best hires have been from non-target schools who have gone on post banking to do amazing things and be very successful. But it is kind of on you a little bit, because that job posting may not end up on your career services website. So you kind of got to position yourself, and go out and fight to get that opportunity and to get that look.
Yeah.
And again, I think joining the finance club is key. And then tracking alumni. Any school that, even any non-target school is going to have alumni that ended up at a bank that you're interested in. If you just do a quick LinkedIn search, you can probably track them down. And
Yeah.
even if you're reaching out to an MD, guess what? They may be really excited about the fact that they can bring someone on from their alma mater, and have them join that bank. So
Yeah.
be thoughtful about those types. You may have a very good introduction in that method.
You never know where your introductions are going to come from, to be honest. I mean, like some of our clients have had the most unexpected intros, that they didn't even know they had those connections. And I mean, part of what we do is also teach our clients, at least on the networking side, like teach them how to go and uncover these connections that they never knew they had, right? Like I had a client that just for this most recent recruiting cycle, he went through many interviews and kept getting to the super days, and he was really good. Like he knew his stuff, because I know, because I did all his mock interviews and stuff. But he was just like always like this close to getting an offer, but he wouldn't get the offer. And then later on in the process, like months and months after he started recruiting, he found out that he had a family friend. His parents knew this guy who, I don't know how he didn't know this, to be honest, but this guy who was like CEO of a public company. He might be a billionaire, but if not, he's definitely worth like hundreds of millions of dollars. Like he's run multiple companies before, taken all of them public. And that's obviously a super powerful connection. Like that guy, he put in a couple emails out to his bankers, and was like, he literally was like, hey, I need a favor. You need to interview this guy. And literally that he got the interview just from that one email, right? And then of course he had to still perform during the interview, but like I say, he was very qualified and he was good at interviewing. And I'm sure having that connection also helped, because at the end of the day, it's a relationships business, right? Like bankers want to do the guy a solid if they can, especially if what that means is it helps them hire someone who's qualified. And so like he was like, at the end, he was like, man, I wish I had discovered this guy much earlier on in the process, because it would have made my life so much easier. So it's like, sometimes, to your point, like you just don't know, what those connections are going to turn into, right? But like not leveraging those connections can sometimes be the difference between you getting the job versus not, unfortunately. And so that's all really great advice. By the way, you talked about how a lot of your analysts have gone on to do great things afterwards, even the ones coming from non-target schools. You yourself, like you said earlier, left to go into private equity, and then you took the kind of like untraditional path of going back into banking, right? Because I feel like a lot of people they're trying to get out of banking after 2 years, but you loved it enough to go back. And so can you talk a little bit more? And I know you kind of alluded to this already during your introduction, but can you talk about like the having been on both sides now, having worked in PE and now you're back in banking, and also having kind of like moved up through the analyst, associate, VP levels. There's like a lot of people that I know that did banking, they only know the analyst level, right? Like myself included. And so like, what do you see as kind of like the pros and cons of both sides? Because I wouldn't say like banking is better or PE is better. There's no like better or worse. It's just different, right? Like, so what would you say are the pros and cons of working in banking versus in PE?
Yeah, look, great question. Great question. And again, it really depends on your level. An analyst in banking versus an associate in private equity. Let's just take that for example. Look, I think an analyst in banking comes in and early on really needs to develop their skill set, their modeling skill set, their, including quantitative and qualitative, their attention to detail, their ability to think dynamically, their ability to be creative around a page, a deck, an idea, etc. That's really, and then towards the end of those 2 years as an analyst, or 3 years, if you're doing that extra third year, you kind of start to play as an associate where you're comfortable running down a process, whether that's driving some aspect of a sell side or an M&A process, or working internally with a capital markets team to nail down terms, or working internally with your credit team to conduct diligence, et cetera, et cetera. But as an analyst, you towards the end of your analyst career, you become comfortable running a process, quarterbacking a process, and you're essentially an associate or functioning as an associate. That's where the really exceptional analysts, that's where they stand out. That's what they're able to do by the end of their analyst years. Compare that to an associate in private equity. Well, guess what? That's the expectation. That's no longer a standout positive for that particular individual. That's the expectation. Is as an associate in private equity, you're now doing all of that. You're quarterbacking a process in addition to thinking about how does this look in front of my investment committee? How do we do structuring around a particular deal? How do we do diligence? How do we work with lawyers, et cetera, et cetera? So that becomes the expectation. And then certainly after, an asset is acquired on the private equity side, then your hat changes a little bit, and you switch into operations mode. And different private equity firms do operations at different levels. Some are much more hands-on, some are less hands-on. But potentially, you could be on a daily basis talking to a CEO, a CFO, VP of finance, COO about operations, how to optimize operations, how to drive revenue, what are the key drivers of revenue, how do we pull specific levers, how do we enhance the margin profile, what do we do about real estate footprint, et cetera. And so your responsibilities on a particular investment very much pivot as an associate in private equity. An analyst back on the banking side, they'll do a deal, and most likely after that deal, they'll move on to another deal. And that could be, if you're an industry group, likely in the same industry, but probably potentially a different product. Maybe you did an IPO one day. Well, the next day you're thinking about a sell side. And then once that sell side's done, you're thinking about a financing. But every couple of months it switches, your project switches, and you get a little bit less of that continuity, but much more diversity in terms of products versus an associate in private equity. And particularly as you grow as an associate and beyond, you really stay with an investment your entire time, from the initial investment through operations, through potentially an exit once that private equity firm is ready to exit.
So if I were to really sum it up, the way I usually try to describe it to people, I don't know if you agree with this, is I think of banking as going broad or going wide, and then I think of PE as more going deep, right? Like you're going really deep into one company or two companies, like whatever companies you end up acquiring, you get to know that company really, really well, know the management team really, really well, and you're like in the trenches working with them on the business. Whereas in banking, it's a lot more transactional, where you're trying to do as many deals as you can, and then once you're done with the deal, you're moving on to the next deal, right? Whether it's with a different company, or maybe it's a different type of transaction, like you said, like a capital raise versus an M&A deal or something like that.
Yeah, absolutely. The one caveat I'll say is, even in banking, especially if you're in an industry group, over time, you'll also develop the industry experience and expertise. You'll understand the landscape, the different players, and you'll be able to talk very intelligently about that space and key drivers in that space.
Yep. Okay. That's awesome. And so then you came back to banking after PE, and then you went to the associate role, and then you went through, now you're a VP, and then by this time next week, hopefully you'll be a director, right? Fingers crossed for you there. How has your responsibilities changed over time? And then along with that, like, how has your skill set needed to change with it? Because obviously what you were doing as an analyst is different from what you did as an associate, and what you did as an associate, probably different than what you're doing as a VP now. And then even looking ahead, as you become a director,
Yep.
what you're doing is probably going to change again, right? And so, like, can you just talk about that a little bit? Like, for people who are maybe thinking about banking not just as like a two and out type of thing, and maybe they are considering doing it longer term, like, what do they need to be aware of? And then also, as a follow-up to that, um, can you talk about, because one of the biggest concerns that students always have, and this is maybe the part that they aren't able to ask bankers typically, is the work-life balance, right? Like, when you're networking a banker, you don't really want to ask about like the work-life balance because you don't want to seem like that guy who's lazy or whatever. But like,
Yep.
how has your work-life balance changed as you become more and more senior in banking? Can you talk about kind of those two things?
Yeah, yeah, definitely. Well, look, on the first question, I think the about how your responsibilities evolve. I think that's the awesome part about investment banking is looking back. In the last 10 years, 10 years plus in my career, I feel like every year, and particularly in banking, every year my responsibilities have changed. You come in as an analyst, and that first year you're really learning, and you're trying to learn as many different types of models, as many different types of pitch books and bake-off books and processes. You're trying to learn the internal processes and really just get good at being an analyst. Then, and I alluded to this earlier, your second year as an analyst, the analysts that really become exceptional are the ones that kind of transition a little bit into playing as associates, where they can run a process down in addition to doing all the technical work, the modeling, the deck, without any mistakes, et cetera, et cetera. Then, as an associate, and this, obviously depends. If you come in as an MBA into the associate seat, well, guess what? Your first year, you're still doing a lot of that heavy learning from a technical standpoint because you're a career switcher as well.
Right.
But if you were previously an analyst and all of a sudden you find yourself as an associate, well, now you got to break out of that shell a little bit of being the doer on a model and transition into being a good reviewer, transition into being a mentor, transition into being a good teacher for analysts to make sure that they're getting up to speed, they're building their skill set. The next year as an associate, you're continuing to build that kind of quarterback skill set where now maybe you're working directly with an MD or sometimes just by yourself, and you're running a process, and people are turning to you, senior people are turning to you with key questions, and status updates and idea generation. So that's kind of the associate years. And then towards the end of your associate years into your VP years, you start to transition more into that idea generation phase and more into the client facing phase, where maybe there are clients that now you're building relationships, direct relationships with, and certain potentially smaller clients that you're just really responsible for, and for bringing in business with those smaller clients. That really becomes kind of the VP years where you're starting that transition into much more of a client-facing role. And then look, director and MD, director is where you really prove out that you can drive a new platform for the bank and drive new revenue opportunities for the bank that maybe didn't exist before or nobody had time to look at before. And you're establishing that platform for yourself. That's really where the director years are spent. Look, often as a director, you'll still be pulled in, and certainly as a senior VP, you'll still be pulled into execution very much, especially on like the bigger deals that are important to the firm. That'll very much be the case. But you're now at that level working towards, hey, how do I get to the managing director level where now I own relationships, and I am kind of a senior partner at the firm. That's the progression in a nutshell. To talk about work-life balance, look, I mean, I think a lot of the folks on the phone that are looking at banking are excited about it because they can get, as we always say, the 4 years of experience in 2 years of being an analyst.
Right.
That doesn't come, working, the 9 to 5 job. You're going to work late. There will be weekends that will get blown up. There'll be long nights, but hopefully you'll have a good experience. You'll work on meaningful projects, and this comes back to picking the right place that you fit into. You're working with talented people who you get along with and you can joke with, and can give you advice, but also be lighthearted. And actually that bullpen feeling is, and Sam remembers it as well. It's exceptional because
Yeah.
you form friendships with people, and you're in the thick of it together, but you form really long lasting friendships together. So that's really valuable. Does your work life balance get better over time? Yes, it does. I can't say that being an associate or a VP, it gets that much better, but it does get better in the sense that you can kind of manage your time a little bit more. And, if you have plans to go take, vacation or something you want to do on the weekend, it's a little bit easier to manage those plans. The one caveat I'll say is the more senior you get in an investment bank, I think the more time you spend traveling. And so the travel kind of means that you're potentially away from your family and et cetera, et cetera. So that is one consideration. The other thing I'll add is I do think that, even since Sam and I, we're analysts, I think that things have changed a little bit, and all the banks are a little bit more focused on doing a better job enforcing work-life balance. Whether that means at certain banks protected Saturdays, at other banks mandatory vacations, at other banks kind of having senior sign-off on certain projects. I think people are a lot more focused on making sure that analysts and associates and kind of the junior team has the protections in place to be able to maintain some level of work-life balance.
Where was all that when we were analysts?
Well, they were working towards it. They were working towards it. Those changes were in progress.
Just like a couple of years too late, right? But that's all a great point. I think on the work-life balance, by the way, on the career progression thing, just to kind of like recap what you said, I think earlier on in your banking career, you're more of like you're the analytical horsepower on the project. You're building the models, you're building the deck, and you're the tech. You have to be really technical, right? And then like the more, and it's kind of, I think of it as a spectrum. Like the more, and not that I've been a managing director, but I've worked with them. As you move towards the more and more senior levels, your job goes from more of like an analytical, which is why you're called an analyst, right? More of an analytical role to more of like a sales role, right? Like you're interfacing with clients, you're pitching them on different ideas. You have to convince them why doing a certain deal with your bank is a good idea for their business. And so that skill set kind of changes. Like I know a lot of people that would be very, very good analysts, but they would be really, really shitty MDs, right? And vice versa, right? Would you say that's true? And like not everyone is able to make that transition successfully, right?
Yeah, look, it's a very good point. It's a very good point. It's a different skill set. It's a much at the senior levels. It's a much more sales focused skill set. Some people are, a little bit call it more born with it. Some people have to build that skill set. But I would argue as I look back and as I look around the landscape of different types of job opportunities, frankly, I think any job you go into, obviously in Sam's point, banking as an MD, you're very much a salesperson. But any senior position you go into, there is going to be an element of sales skills that you need to have. In private equity, guess what? You need to sell a management team on you, in addition to paying the highest price, being a good investor and being the right partner. You need to sell LPs on investing in your fund. A CEO is constantly in sales mode when they're talking to either investors or customers, et cetera, et cetera. So, that sales skill doesn't go away. I think really any job you take, whether it's finance, consulting, even entrepreneurship, et cetera, there's going to be an element of sales that as you progress in your career, you'll need to pick up and kind of be good at.
Got it. That makes sense. I wanna kind of like open it up for questions here because I know I've been asking all the questions and hogging all the time, but and I see there's one question in the queue here from Zion, but for those of you that are interested in asking questions, drop your questions down in the comments below. We'll try to get through as many as we can, but obviously I also want to respect George's time. While you guys are doing that, just because there's a bit of a lag in terms of when I actually see your comments show up, I'll just do a little quick commercial break. And so for those of you that are new to the group and maybe not as familiar with what it is that we do at Wall Street Mastermind, essentially we're very unique in that we help our clients with everything they need from a recruiting standpoint from A to Z. So whether it's your application materials, to teaching you how to network, to helping you prep for the interviews, whether it's behavioral interviews or the technical interviews, to helping you find internships, to build up your resume, like whatever it is that you may need. And we take more of a coaching model as opposed to, like, this is not a course. This is not like, here's a PDF guide, go memorize these 400 questions. It's not like, here's a financial modeling course, go watch a bunch of videos on your own. It's like, no, you're actually working with both me and some of the other people on my team, all former bankers from top banks, to walk you through that process step by step, right? And so if that's something that you guys think you're interested in, or you feel like you need that help, go check out our website. It's wallstreetmastermind.com. The street's abbreviated to ST. If you want to talk to our team to see if it's a good fit for us to help you, just because we don't work with that many people, honestly, like in the last 3 years or so, we've worked with about 300 students today. So it's not a lot. We're not working with like thousands and thousands of people. So if you want to see if it's a good fit and if we can actually help you, you can also book a call with us at www.wallstreetmastermind.com/apply. And again, the street is abbreviated to ST, right? So, and then, we'll hop on and we'll learn more about your situation and see what it is that you need help with. And we'll let you know if we think we can help and how we can help, or if not, then we'll at least give you some advice on what we think you should do, or what we would do if we were you. Okay. So with that said, let me take a look at kind of like the questions we have in the queue here. All right, George, you ready for some kind of rapid fire questions?
I'll add, you're in great hands with Sam, incredibly talented and knowledgeable guy, and I've known Sam for many years, so you're in great hands here.
Thank you. I had to pay George to say that. So, first question here is from Zion. Okay, so Zion asks, how are analysts adapting to work from home? So obviously we're in a unique time here with COVID. And also you mentioned earlier, like the more senior you get, you're traveling a lot, so you're spending time away from my parents. I was speaking to another friend of mine who's actually an MD now, and she's saying she loves work during COVID because she doesn't have to travel anymore. Her hours are so much better as an MD without having to travel.
Yeah. Yeah, look, it's a really relevant question, and it's a really good question. Hopefully by the time, a lot of folks on the phone are in their seats as summers or full-time analysts, things are back to being in person. Because I'll say this, look, I think the virtual environment is in fact hardest on a junior person just starting off their career in banking. Frankly, any profession, but particularly in banking, I think it's hardest for a couple of reasons. One, you hit, your virtual desk, but first and foremost, you don't get that cultural kind of environment. You don't get the ability to sit in a bullpen where, again, you form these long-lasting relationships. You can have interactions. You can joke around with people. But importantly, you can raise your hand and ask a question and have a fellow analyst come over, answer, walk you through a model, et cetera, et cetera. So I think, one, you miss out on the culture. Two, I do think it's harder to learn virtually. And so as a junior, analyst, it is much more challenging. What are our analysts doing to overcome that? Well, you got to be proactive. You got to be proactive about calling, and not just, the instant message, because that often is hard, especially on complicated questions. You either got to call another analyst or your associate or your VP. You got to Zoom with them. You got to be proactive about making question lists. You got to be proactive about you'll get training at most banks. You'll get kind of the initial training, but you got to spend a Saturday, a Sunday, an afternoon, an evening going through a model, building that model from scratch, doing it yourself, and then going back and asking the relevant questions. Unfortunately, that falls on the analyst, and it is a little bit tougher at the junior level. At the more senior level, look, fundamentally this job is a people-facing job, and so you kind of need that interaction. And I very much think that ultimately, once kind of COVID is behind us, it'll go back to in-person meetings, in-person decisions, et cetera, et cetera. But for the time being, we've been able to be just as efficient as we were pre-pandemic, just as busy, if not more busy, and just as capable to execute for our clients and do it all virtually. And that is, with the help of Zoom, with the help of phone calls, with the help of much more frequent interaction. But we've made it work. And at the senior level, our MDs, they, frankly, probably touch their clients a little bit more often just because everyone's just a Zoom or a phone call away, which is great and helpful. And so that certainly has aided the situation.
Got it. Okay, cool. That's really helpful. So look, I think Zion, the biggest takeaway I have from that is you just got to be more proactive, right? People aren't going to babysit you. They're not going to micromanage or check on you all the time. Like if you're not proactive about learning from people and getting the help that you need, then you're probably going to get less of that, right? Just because you're not that person. So the next question we have is from and Ramez, I'm going to come back to your question because I had a follow-up for you, but from Roham. Roham says, how to spin private equity or asset management summer experience when recruiting for investment banking for a junior summer internship. So I guess like if he has a PE internship or asset management internship on his resume, like how does he make that more relevant to banking?
Yeah, great question. Look, I in your resume would highlight the fact that during that PE internship that you did some modeling. Maybe you did some valuation, a DCF, a merger model for a portfolio company. You looked at comps, you looked at precedent transactions. You maybe interacted with a banker and looked through a pitch book and know what that entails. You know what a bake-off deck might entail. I'd put some of that hardline, technical stuff on your resume if you did it. I'm not saying don't put it on there if you didn't do it. Especially if someone asks you a question and you're not prepared for it. That's not what I'm saying whatsoever. But if you did do that kind of technical and had that technical experience, put it on the resume, so it doesn't seem like for a summer you sat there and just did profiles. That's probably less relevant for a resume. That's how I would spin it. I would also spin it by saying that the private equity internship was great, but you're looking for the fast-paced dynamic environment where you get to work on a lot of different product types, equity, debt, M&A, sell sides, maybe private placements, et cetera. And banking's the right place for you to do that.
Got it. That's great advice. So let's see here. Let me come back to Ramez's question. So what are the chances to get into IB for a recent grad from CSU Northridge, majoring in finance, landed a financial analyst role with PennyMac, but no luck with IBs? Actually, I could probably take this one. Ramez, I think most of the bigger banks, at least, it depends on what you're aiming for. But if you're aiming for like a bulge bracket or an elite boutique or a middle market bank, like some of these more reputable banks, like I said, they're going to have very structured recruiting processes where they primarily hire out of either undergrads or business school programs like MBAs, right? And so if you're already recently graduated, you're out of undergrad already, it's going to be pretty hard for you to break into a bank like that. I mean, you might be able to do that at like a smaller regional boutique bank, maybe but otherwise, if you're targeting one of these bigger banks, you're probably going to have to go back and get an MBA from a top business school. I'm talking like top 10, minimum, probably top 20. Otherwise, I think it's going to be pretty tough. But if you want to go like the regional boutique route, then there's a lot more factors that go into that, whether it's, in terms of your profile and work experience and GPA and all that. And, I can talk to you more about that offline, just because this is more personal to you and we don't have to do that here. But George, I don't know if you agree with what I'm saying. Is like, if you're already out of school and you want to go to a top bank, you probably got to go back and get an MBA, right?
Yeah, I mean, look, if that's your focus and that's your passion, don't disqualify it. We've certainly hired folks even at the analyst level who were in different seats, and maybe they were, even did a year of consulting or they did a year of some sort of advisory or something else. Those opportunities do come by. Certainly, it is a little bit more challenging, and again, even more incumbent on you to go network. Those opportunities do come up. I would say one other thing is, and I'm very guilty of this as well, especially as a junior person, it starts with like picking your favorite college. You really have your hopes and dreams set on one thing. And then if it doesn't necessarily work out, it's very devastating. But I will tell you, in the grand scheme of things, as long as you're kind of hardworking, dedicated, persistent, you'll figure it out. and maybe it won't be that first place that you wanted to land, but you'll still get there one way or another. And frankly, you may end up in the place you want to be, or in another place, and you may be much more happier,
Yeah.
or maybe a much better fit for you, et cetera, et cetera. So don't get upset if it doesn't, work out the first time, or doesn't work out exactly the way you planned. Life has a lot of twists and turns. Things happen for a reason, and oftentimes you end up in an even better position. But you do have to be hardworking. You have to be, you have to show that perseverance. You have to network, et cetera, et cetera.
Absolutely. That's great advice. So, Ramez, if you want to talk more about this, feel free to just message me on Facebook Messenger, and we could talk in private. All right. Let me get through some of these other questions. Some people are coming in with questions that and they haven't gotten a chance to ask. So, Shivam asks, what do you recommend focusing on above all else, technicals or behaviorals? So this is the question I would get all the time. Like, which is more important, the technical interview or the behavioral interview, in your opinion?
Yeah, look, I think it's a mix. I think in an interview, you really have to be able to sell why you want to do finance, why you want to do banking. I'd on top of that add why you want that particular investment bank or that particular group. You have to come off as hardworking. Your resume will show that, but you have to be able to walk through your resume and describe it. You have to come off at most institutions as a team player, someone that will fit well, a go-getter, and someone that will show initiative. I think that's hugely important, and you'll be tested on that. But you'll also definitely be tested on the technicals. And look, if you're going for an internship, we understand at the interview level that if you're a sophomore, you probably don't know the technicals as well as someone that's been doing the job for a couple years. So those interviews are calibrated. But you should be working with Sam to go through key technicals to understand, how perhaps a DCF might work, how a WAC is calculated, et cetera, et cetera. Like long story short, you will be tested on both, and need to have the skill set nailed for both.
Yeah, I always tell people like neither of these things are nice to have. They're both mandatory, right? But I find that in my experience, students tend to spend a lot more time on learning the technicals, and understandable, because that's one of those things where if you go into an interview and they ask you a technical question that you don't know how to answer, it's going to be very, very obvious, right? Whereas with the behaviorals, people kind of feel like, hey, if I get asked something that I'm not really sure about, I can maybe just kind of wing it and come up with something on the spot. Although in my experience, at least, having worked with, about 300 clients at this point, what we've seen typically is like, we've had clients that have gotten offers even when they maybe messed up on one or two technicals during the interviews, but they were really, really stellar on the behavioral side in terms of like
Totally.
presenting themselves as a person who's a good fit for the firm. But I've never seen anyone who has mediocre behavioral answers and nailed every single technical question and gotten a job just because of that, right? Because
Totally.
at the end of the day, from a banker's perspective, you guys can teach them all the technical stuff they need to know, but you can't really change someone's personality or turn someone who's, if this is someone that you don't really want to work with, you can't really turn them into someone that you enjoy working with, right?
Totally.
And so
Yeah, and I'd add that I'd be, in an interview, if someone asks you a technical question you don't know, I'd be very upfront about that and be like, look, I don't know. I'm happy to take an educated guess about how to do this, but I wouldn't try to bullshit your way through. I'd be upfront. And to Sam's point, I totally agree. We hire candidates all the time that, we don't expect you to know all the technicals. Maybe you don't answer all the technicals 100%, but you do show up on the behavioral points. And the other thing I'd add there is, if you're getting interviewed by a full group and not just, a certain subset of a group, typically you'll be interviewed by an MD, a VP, analysts, associates. And it's oftentimes that, the MDs, the directors, the VPs, they're the ones that spend more time on the behavioral questions as opposed to the technical questions. And guess what? If you can't prove to them that you check boxes on the behavioral side, having them, not in your camp or against you when it comes time to making a decision, that's the toughest. Having them on your side when it comes time to make a decision, that's the best place you want to be.
Yep, absolutely. How are we doing on time, George? You got time for one more? I got one more.
Yeah, no problem.
All right, cool. So let's do one more. So this one's from Solar. He says, how to successfully lateral from a lower middle market firm to a middle market investment bank with no closed deals in the first year, mainly focused on debt advisory and acquisition finance.
Yeah, yeah. Look, I think it's a great question. Candidly, in my first year as an analyst, again, it was a weird time coming out of the Great Recession. I didn't have too much to speak about in terms of um, live deal experience. But part of the reason you're out interviewing is because you want a broader experience and you want more deal exposure and you want more client exposure. It's an excellent argument to go out and to be interviewing, and people will buy that argument. And you want to transition to, call it a more dynamic platform. So I think you've got the speech right there when you go out and interview. And maybe maybe it's banking, maybe you're transitioning into the capital markets arm, or a leverage finance arm, or an equity capital markets arm of a larger bank. That could be an interesting role or seat for you coming out of a place where maybe you did a little bit of acquisition finance previously.
Yeah. Yeah. And I'll just add a little bit of my own thoughts to that. Like, I mean, not just, whether you're going from lower middle market to middle market, or you're trying to go from middle market to bulge bracket or whatever, right? Like if you're trying to lateral, or you're trying to lateral from outside of banking to into banking, because, we've also had clients that try to go from doing audit at KPMG into banking. We've had a couple of clients like that, actually, or from valuation into banking. Not like George, where he was interning valuation, but these people are doing valuation full time and then trying to lateral into banking. But anytime you're trying to lateral, I would say like lateral opportunities are more ad hoc, right? Like they only come up when there's a need by the firm. Like George said, like maybe somebody quit and left early, or sometimes maybe the firm underhired during like a 08, 09 situation, or during 2020 during the COVID, people underhired, and then when the market rebounds and deal activity picked back up, and all of a sudden they're understaffed, that's typically when banks will hire laterals, right? So one, you have to like keep your eyes open and like stay on top of what's going on in the markets and know when these opportunities are going to come up, right? And there are certain things you can do to kind of stay on top of job opportunities and setting up job alerts on different websites and things like that, which we teach our clients to do. But I won't get into the weeds here. The other thing is like, look, because it's so ad hoc, a lot of it, in my experience, is going to come down to your networking, right? Like, even when there is a lateral opportunity, especially at some of these bigger banks, it's not like a firm-wide thing. It's not like they're hiring laterals across the firm. It's like one specific pocket inside the firm will be hiring laterals. Like this group that happens to have a need will be hiring laterals, right? And like even when I lateral from Deutsche Bank to Morgan Stanley, like the way I found out about it was because I had an acquaintance. I wouldn't even say a friend. I had an acquaintance from college who was an analyst at Morgan Stanley, and their staffer went to the bullpen and said, "Hey, we're looking for two new analysts. We're two lateral hires. Do you guys know anyone that would be good for the positions?" And then like they just went out into their personal networks, and my acquaintance reached out and was like, "Hey, he knew I was at Deutsche Bank. Hey, we're looking for a lateral. Are you interested?" And I was like, "Yeah, I'm interested." And then like within a week, I had gone through the entire like first round phone screen with the staffer, to the in-person interview, to the super day, to having the offer. That happened within a week, right? And so if I didn't have that connection with someone who was already in that group, in the right group at the right time, I probably wouldn't have heard about the opportunity. And then like a week later, the opportunity's gone, and then that's it, right? And then you missed it. And so my point is, you really got to build out your network. You really got to try to get to know as many people in as many of these places as possible. I'm not even talking about like, oh, know people at every single firm. It's almost like you have to know people at the group level, because if you know someone in the wrong group and they're not the ones hiring, you still might not hear about the opportunity, right? So I think networking is going to be absolutely critical for you. And look, again, if that's something that you're not really sure how to approach it or how to go about it, that's something that we help our clients with in detail. So happy to talk to you about that. Again, message me on Facebook Messenger if you want to do that, and happy to speak further about it. Okay. I think we're out of time, guys. We've already we've gone over by 8 minutes. George, I want to thank you again for taking so much time to just give all this genuine and candid advice to kind of like our listeners here, and I'm sure people got a lot out of this. I learned a lot out of this, even though I've already been in banking, and it's always just good to catch up. And look, best of luck, man, with your promotion next week. If you get it, drinks on you the next time I see you.
Sounds like a plan. Yeah, and happy to do it, and great to chat with everyone. Thank you for the questions.
Yeah, absolutely. All right, guys, that'll be it for this week. We'll be back again next Tuesday around the same time with another live stream for you guys on probably a different topic. So make sure to stay tuned for that, and we'll talk to you guys soon. All right, later. Hey there, I hope you enjoyed this video. If you're looking for more customized advice that's tailored for your specific situation, then I invite you to book a free strategy session with our team at the link below. We'll talk to you soon.